Hello viewers, I am Neeraj Chandra and I head the products team at Bank of India Investment Managers Private Limited. Firstly, wishing you all a very happy new year 2026. With the excitement around the New Year celebration, Bank of India Mutual Fund has come up with its new fund offer in one of the key sector which fuels the India growth journey, the banking and financial services sector. The NFO Bank of India Banking and Financial Services Fund is open from 8th January 2026 to 22nd January 2026. In today's conversation, we have with us the expert portfolio manager and also the fund manager for this fund, Mr. Nilesh Jaitani, who has been managing the core strategy portfolio and is an expert in banking and financial services segment for more than a decade. Who else other than Nilesh himself can dissect the sector and enrich us with key highlights? Hi Nilesh, how are you?
Hi Neeraj, I'm good, thank you.
It's a pleasure talking to you today on conversation regarding the new fund offer which Bank of India Mutual Fund has come up. So, how do you think this sector looks to be an opportunity from investment standpoint?
So Neeraj, any sector, any segment, whether when we invest into, it's important to understand how the sector has evolved and also to understand the relevance of that sector. So when we see banking and financial services as a sector, it has seen a gradual yet a very transformational change over the last 50 years. In early years, banks were the main center stage where they were catering to the urban population, largely to the creamy layer of the population. But as the demand for finance increased, NBFCs emerged as a backbone for the Indian economy. Today, we have many NBFCs across the length and breadth of the economy catering to the needs of various lending requirements of our population. Or with this increasing volume and value of transaction, the need for efficient capital and management also emerged in the country. And hence, a lot of capital market avenues like broking houses, investment firms emerged in the country. Also, with the rising volume as well as value of this transaction, it became extremely important to conserve lives, assets, as well as corporations. And hence, insurance came as a natural progression of the widening or enhancing Indian economy. And it is very interesting to see in the last decade, a lot of fintechs have emerged in the country. While initially they started as a payment solution, but today they cater to the wider needs of providing insurance products, wealth tech, insurtech, as well as various digital first lending approach. The sector has evolved from being a physical institution, say 50 years back, to today more a digital institution catering to the all needs of the society. And also important to understand the sector's relevance also. Say in 2005, when BFSI as a sector used to contribute mere 13% to the overall Nifty 50, today it contributes more than 37% to the overall Nifty 50 index. So this clearly indicates the leverage which the sector shows on the overall growth of the economy. And just to give you an example, vis-a-vis nominal GDP growth and India's market cap growth, in the last 20 years, when India's nominal GDP would have grown at 10x, India's overall market cap grew at about 24x. At the same time, the market cap of the BFSI grew by about 50x. So this clearly indicates the sector's leverage over the India's growth story. And when we talk about the returns perspective for the indexes, say Nifty Financial Services Index on a total return basis would have emerged or would have grown by about 28x in last 20 years. At the same time, say Nifty 50 or Nifty 500 total return index would be anywhere in the range of 16 to 17x. So this again clearly shows how sector has evolved over the last 20 years and it has been the backbone for the India's growth story. Now it's also important to understand the volatility and the stability which the sector provides. Say for example, in the last 10 years, if one would have invested into banking and financial services index, he would have garnered a much higher return versus say, Nifty 50 or Nifty 500. At the same time, would have taken much lower risk, which is measured in terms of volatility, in terms of your investment horizon. So I believe sector has clearly evolved over the last 50 years. And with the business models today being listed on the Indian exchanges, I believe that the sector will give a multi-decadal opportunity to the investors.
Great insight, Nilesh. This is so enriching. as we understand from you, the banking and financial services sector is not single sector. It is sector of multiple industries, as you rightly highlighted, with market cap going around 50 plus X. That is, if I am right, right?
Yes.
So, why do you see now banking and financial services sector looks to be an opportunity?
So, Neeraj, that is a very good question. So, one will always debate that there are certain segments within the BFSI, which is banks, life insurance, which are growing at a nominal GDP rate. But it's also important to understand there are certain pockets within the BFSI, say capital markets, insurance, fintechs. They are growing at a much higher pace versus the overall BFSI sector. And of course, the underpenetration gives us the hope that there's a huge potential still left in the sector. I'll give you a few examples over here, Neeraj.
Sure.
So when you see capital markets as a sector, so India's trading activity would have gone up approximately 5x in last 10 years. This shows a rising interest of the investors.
Yes, absolutely.
But when I give you an example of a population to the PAN card, so today India has approximately 145 crore population, out of which approximately 80 crore population has PAN card. But out of this 80 crore PAN card issuance, the number of unique NSE investors today in India is only at 11 crores. So this clearly showcases the long runway of growth. I'll give you one more example over here. Say India's mutual fund industry. So India's mutual fund assets would have grown 6x in last 10 years. But at the same time, I'll give you the similar example of population and the PAN card and the investors. So today, India's PAN card issuance, which stands at around 80 crores, unique mutual fund investors today in India are still 5.4 crores. So that's merely 6 to 7% of addressable market which are investing in mutual funds. So that also gives you a huge runway of growth going ahead. And the most interesting thing over here is fintechs. So what we have seen in the past, a lot of fintechs have emerged or mushroomed in the country. While initially, a lot of them came as a payment solution provider. I'll give you an example of payments also. Say in FY16, when India consumed about 80 trillion worth of goods and services, about 7% of those transactions were done using UPI P2M mechanism. But when we fast forward to FY25, so when India consumed more than 200 trillion worth of goods and services, about 51% of those transactions were done using UPI payments. So this clearly indicates the adoption of digital payments by Indians. So what has happened in the last 10 years is a lot of these fintechs were able to garner or capture a lot of clients. So now they're trying to cross-sell various products like insurance, capital market, broking, a digital first wealth management solution, as well as a lot of lending products are being garnered using these fintech channels. So this clearly shows the underpenetration in many pockets within the BFSI, which we think is still underpenetrated and gives a huge runway of growth. Now it's also important to understand the valuations at which sector is trading today. So when we see the long-term average for the sector, Nifty Financial Services Index today is trading at a discount to its own long-term average. Of course, there were reasons in the last 2.5 years which led to the underperformance, led by several regulatory challenges which the sector faced. And when I compare to the Nifty 50 index also, the sector also trading at a steep discount to the Nifty 50 also. And let's take example of banks also. So when we compare banks, when they average trade at 20 to 25% discount to broader indices, today banks are trading at approximately 40% discount to the broader indices. So we believe there is a good scope of mean reversion as far as the valuation catch-up is concerned. And we have our own reason. So from a banking sector perspective, today the banks are at a much stable ROE position and a much stronger balance sheets which they are seeing. And at the same time, the gross NPA or the asset quality issues in the sector are at all-time low levels. So yeah, we believe these are the reasons why sector will mean revert in the interim period. And of course, in the long run, when as economy grows, the need for larger institution to drive the mega infrastructure M&A projects, the need for larger banks will always remain in the country. So Neeraj, considering the valuations, we believe it's the most attractive time to invest into the sector.
Nilesh, great insight. As you rightly highlighted, banking and financial services sector is a multi-decadal opportunity. And also, as you mentioned about the shift from banking being physical to getting into digital side of it, or fintech rather. And there are many avenues which are non-lending side, as you rightly mentioned, about capital market, insurance, fintechs, and others. I think this sector looks to be an opportunity way forward. So, how do you think Bank of India Banking and Financial Services Fund looks to be an opportunity, and what are the constructs you have for this way forward?
Interesting question. So, Neeraj, it's important to understand how we work and what are we thinking from the portfolio construction approach. So, when we see the overall sector is divided into three larger buckets. One is the compounders, which are stable ROE generators, superior cash flow generating businesses with a steady growth rate, which are typically large banks and large NBFCs. But at the same time, sector has good pockets of high growing businesses which are still growing at a much faster pace than the overall sector. These are capital market, insurance companies, NBFCs, general insurance company. So we'll try to create a portfolio including compounders, high growth businesses, and at the same time look to invest in opportunities which are niche businesses, or we also known as innovators. So there are a lot of fintechs today listed in the Indian markets, either on the insurtech or the wealth tech or digital lending approach. We'll try to invest in those companies also. So from a portfolio construction perspective, we'll try to invest in these three key categories and optimize the returns for the investors.
So, Nilesh, how would you construct the entire portfolio of this fund?
So, Neeraj, it's a banking and financial services fund. So, at any given point of time, about 80 to 100% of the investment would remain in equity, and that too specified to the banking and financial services sector. And of course, 20% could be deployed in non-BFSI segment. It's going to be a market cap agnostic approach. So, we'll try to pick and choose leaders across large, mid, and small cap. And at the same time, it's going to be a top down and bottom up approach. So, sector is more driven by the macro factors. So, it's important to understand the direction as far as the macro characteristics are concerned. At the same time, we'll try and pick and choose the fast growing businesses within each sub segment. So, it's going to be a top down as well as bottom up investment approach.
Okay. So, from the investor's standpoint, who is this fund suitable for?
Neeraj, any investors who wants to take exposure to the banking and financial services sector should invest into this. At the same time, the investor should have a higher risk appetite considering it's a sectoral fund. And from the investment horizon point of view, it should be 5 years and above.
Nilesh, what would be the asset allocation approach for Bank of India Banking and Financial Services Fund?
So Neeraj, this is a banking and financial services scheme. So at any given point of time, about 80 to 100% of the overall asset would be invested in equity and equity related instruments of the banking and financial services sector. At the same time, fund can invest up to 0 to 20% into debt and money market instruments. At the same time, we can also invest up to 10% into InvITs. As far as the market cap is concerned, it's going to be a market cap agnostic approach so that we can try and find the winners within each market cap. At the same time, it's going to be top down and bottom up approach. Since sector is largely driven by the macro factors, so it's important to have a top down approach. At the same time, it's important to find out the winners within each categories of the sub-segment. Hence, it will be more from a top down as well as a bottom up approach. So that's the portfolio construction approach we'll follow.
Thank you, Nilesh, for the great insight on the upcoming NFO Bank of India Banking and Financial Services Fund. I hope we were able to address all the details regarding this fund. Just to reiterate, the fund opens on 8th January 2026 and closes on 22nd January 2026. To know more details, you can visit the link given in the description below. Thank you and happy investing.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.